Welcome everyone to this session on crypto custody. We are going to have a bit of a discussion between myself and a number of my colleagues from around the world, all of whose pictures you can see on this slide and all of whose faces you can probably see on the Zoom as well. But we have Carolina from Germany, Floortje from the Netherlands, Etelka from Hong Kong, Andrew and Glen from the US, Albert from the UK, and Tim from Canada. So hopefully quite a range, as you can see. All of us are financial services practitioners by background, and we all do quite a lot of work in the FinTech sector generally, and have all been involved in some crypto custody work. So hopefully we'll have some interesting insights to share with you. So we wanted to talk about this topic because it raises some interesting questions, some of which are kind of highlighted on the next slide. And having discussed these questions between ourselves over the last months and years, we've kind of realised that although there are many common themes between the different countries, there are also quite a lot of differences in detail. And we've also noticed that while custody is a very well-established service in its traditional sense, the nature of this asset class means you have to think about it in quite different ways, including, for example, the nature of the asset, the risks for both the client and the custodian, and even the scenarios where you might be acting as a custodian. One of the other things we've thought about is the fact that the authorities tend to regulate custody of securities and traditional financial instruments quite heavily because of the importance they place on looking after somebody else's assets. But we shouldn't necessarily assume that custody of crypto assets is regulated in quite the same way in all countries around the world. So that's another interesting angle to this, I think. On top of all that, of course, it's not always that easy to know whose regime you should be worrying about in the first place. So that's kind of like a threshold question. So I don't know that we're necessarily going to have time to talk about all of these questions today, but we will try and get to some of the key questions during the course of the presentation. And as was mentioned, if you have any questions you want us to try and weave in, then please do submit them through the Q&A chat. Okay, so if we start off then with our first question, we know that custody and how it works from a legal and regulatory perspective depends very much on the nature of the asset and how the relevant law treats that asset, particularly the legal basis on which assets have to be held in order to ensure that they're protected for the owner. And so we wanted to start off with this key question, which is how does the law in your jurisdiction categorize crypto assets and what does that mean for their custody? And in particular, does the law or regulation make a distinction between coins and keys when we're talking about custody? So Albert, perhaps I can start off with you in the UK and then maybe you could kind of hand on to the next person if that's okay.
Sure thing. Thanks, Hannah, and hi everybody. Good to be with you this afternoon, this morning, wherever you are. So from a UK standpoint, we have effectively a regime which categorizes crypto assets into three different classifications. We have security tokens. They are those which have characteristics of more traditional financial instruments and securities, the rights and obligations that you would expect to arise in connection with things like shares or bonds or derivative instruments. We have a category of unregulated tokens, which somewhat does what it says on the tin, in that they are comprised of those tokens which the regulator believes that aren't currently in our perimeter. And we also have electronic money tokens, which are tokenized representations of electronic money. And they fall to some degree within the regulatory sphere if you are issuing those tokens. And when you break down the unregulated tokens, that comprises exchange tokens commonly in at BTC and Litecoin and others, and Ethereum are typically classified as exchange tokens for our purpose, and then also utility tokens. So those tokens that function in a particular protocol or a particular application and don't really have much use outside of that. And so from a reg standpoint, it really depends on whether you're custodying the nature of the assets. So from our standpoint, if you're custodying unregulated tokens like Bitcoin, that is not an activity which requires a license in the UK. But if you were custodying security tokens, for example, that would align you with a more traditional custody type permission base, which you would need to obtain from the FCA to do that. And then finally, just on the distinction between coins and keys, I think we've had some legal work done here in the UK and some sort of judicial thinking on the point And we seem to characterize the coins as a form of property, but keys as a form of information. And so it seems difficult to us from a legal standpoint to be able to custody information, whereas you can custody property. So we do have that distinction between keys and coins. And I think we would typically say that what is being custodied from a legal and property standpoint are the crypto assets themselves and not the keys. So I'll pass across to Andrew in the US.
All right, good to be with everyone today. So in the US, crypto assets can fall into at least 3 different categories, which are typically securities, commodities, or money. And so if they're securities, then that would be within the SEC guidelines and rules. For commodities, that may raise requirements with the CFTC. And for money, you'd be thinking about registration at the state level as a money transmitter, and also with FinCEN, which is the anti-money laundering branch of the US Treasury. So it's in some ways similar to the UK system, although something like Bitcoin, while it may not be regulated directly by the CFTC, futures and provision of margin and other kinds of derivatives on Bitcoin would be subject to direct CFTC regulation. So you still have to worry about that depending on how your custody platform works and what ancillary services you might be providing. On the question of coins and keys, there's less of a distinction in the US, although really it's the keys that give you access to the coins. And so when we think about safekeeping and the actual methods of custody, the keys become very important, even if it's the coins that are technically the thing that you're holding in custody. And so in practice, it may end up being not much of a distinction there at all. And so there, that I think is a good overview for the US, and I'll hand it to Tim in Canada.
Thanks very much, Andrew. So in Canada, the specific categorization can be complicated because depending on the particulars of the crypto asset, it could be a security, it could be a derivative, it could be a security and a derivative, or it could be neither. But in Canada, securities regulators have clarified that even if the crypto asset is not a security, they have broad jurisdiction over the crypto asset investment industry because the instrument or contract that provides the rights to an investor in a crypto asset is itself a security or derivative. So this means that platforms that offer crypto asset accounts to investors are required to become registered as dealers with securities commissions in Canada. Also, funds that hold crypto assets for investors would be subject to securities regulation as mutual funds. With respect to custody, Canadian securities regulators don't directly regulate custodians, but regulators do set the standards that platforms and funds are required to follow in selecting a custodian for crypto assets. So generally, these standards would include the requirement to be a federally regulated bank, a federally or provincially regulated trust company, or in some cases, a securities dealer. But foreign banks and trust companies can qualify for custodian status for platforms and funds in Canada also. And with that, I'll pass it to Etelka in Hong Kong.
Hi, everyone. Good evening from Hong Kong. So the position here is sort of similar but different. So we haven't got an official characterization of crypto assets other than a statement very early on in 2014 that non-securities tokens are considered to be virtual commodities. The fundamental question, which it boils down to is for us is whether the asset is a security or a futures contract or another regulated financial instrument as per the existing securities legislation and regime that we have here. Though it's now pretty much accepted in the market that what we consider to be payment tokens such as BTC and ETH are not regulated instruments, although that is subject to potentially some change. And so the question of custody really depends on the answer to this question. If a trust structure is used for the custody arrangement, it's likely that a Hong Kong provider would need what's called a trust company service provider license. The question that Albert talked about around the differentiation between keys and coins is not as settled here as it is in the UK. There is some case law in Singapore, for example, that talks about the legal nature of tokens being having proprietary rights, and that's likely to be persuasive here in Hong Kong as well. As I alluded to, the regulation of crypto-related activities is undergoing some change in Hong Kong, and perhaps I can discuss that a bit later on. And with that, I'll pass over to Carolina in Germany.
Thank you very much, Etelka. Yes, in Germany, we have a pretty special situation. Generally, and due to European harmonization, crypto assets that are financial instruments under the European regulation MiFID II, Markets and Financial Instruments Directive, would qualify as financial instruments, and this also under German regulatory law. Consequently, there should be no difference between electronic or physical issued securities as long as they qualify as financial instruments. However, German civil law requires securities to be issued in physical form, that means paper form, and at the moment, German law does not recognize electronic securities. This means that according to German civil law, crypto assets will not qualify as securities, and therefore the German Safe Custody Act applying to the custody of securities will not apply. Moreover, since the safe custody of securities regulated business as custody business under the German Banking Act and requiring a respective license, the custody of electronic securities in the form of tokens is not covered. And as a consequence, no license applicable to the safe custody of securities is required at the moment. And because it's only relevant in case of physical securities. So in past, there was no clear regulatory regime relating to the safe custody of electronic securities or other crypto assets. In order to close this gap, in January 2020, the German legislator introduced a new financial service. Crypto custody is defined as safe custody, administration, or securing of crypto assets or private keys. And crypto assets are summarized, defined as digital representation of values, which are used as currency or for investment purposes and can be transferred and stored digitally. The definition includes in particular tokens and, more importantly, the so-called crypto securities. In addition, a draft law on the introduction of an electronic securities law has been published a few months ago, and this is still subject to ongoing discussions. We just got some new comment of the Financial Commission today. And this act will, once it has entered into force, allow for the issuance of electronic securities in Germany, which will be treated the same as physical securities, meaning safe custody of such electronic securities will be custody business and not crypto custody. Further, other laws relating to custody of securities, such as the German Safe Custody Act, will be consequently applicable. However, at the time, for the time being, it's only Bira bonds covered. We thought only fund units will be in scope, but with the new comment, they pushed it back, and it will take maybe a few months more that fund units might be covered by the new law and the new act. But for example, shares or other financial instruments are not covered at the moment and would still fall if they are tokens under the crypto custody definition. So a bit complicated situation in Germany, and I pass on to Floortje in the Netherlands.
Thank you, Caroline. I think then for the Netherlands, it shows that we are currently the simplest jurisdiction, I think, in relation to crypto assets, because we don't have legislation that will cover crypto assets. So unless it is indeed a financial instrument, just like Caroline just mentioned under German law, then we don't have legislation in place in relation to crypto assets. The reason for that is that the Dutch legislator has said that they want to establish a level playing field in relation to these assets and also then the services in relation to these assets. So they will wait until there is European legislation, which there is a proposal for, that is the Meakin, so the markets. The regulation in markets in crypto assets, which is a proposal still, which then provides a regulatory framework which has been developed to to make sure that indeed there will be a European level playing field. And under MiCA, there will be crypto assets. So the crypto assets is defined within the proposal, and there will be 3, say, then tokens. So there will be an asset reference token, an e-money token, and a utility token. So once MiCA would come into play, then of course the crypto assets would be also covered under Dutch law, because MiCA will be directly applicable in all EU member states. So then also for the Netherlands that would apply. But currently there's not a real crypto assets definition or services to be considered to be covered. So I will hand it back to Hannah.
Thank you, Floortje. So, I mean, very much kind of similar ideas coming out of a lot of jurisdictions, but real differences in detail. And as we all know, it's the details that make things a bit more complicated. We had a question that came in while we were talking, which is, which of these jurisdictions offers the most thoughtful, forward-looking and coherent paradigm? I'm going to actually leave you all to judge that for yourselves, unless some of my colleagues want to stake their claim in our next round of questions, in which case feel free to do so, colleagues. So if we move on to question 2, the next question is really kind of building on the first. So looking at whether you need a regulatory license to hold crypto assets and what types of license are possible in each of the jurisdictions. I think this question very much builds on the first one, and I think some people were starting to touch on it already. So we'll kind of follow the same pattern of the same order of jurisdictions. I think, Albert, if we start with you, please.
Sure thing, thanks, Hannah. So on this question, in short, the position is in the UK, if you are custodying security assets that constitute security tokens, you would need an authorization with the FCA, and you would effectively be authorized in the same way as if you were a traditional custodian of other financial instruments. If you are custodying e-money tokens or unregulated tokens, that is not an activity which in and of itself requires an FCA authorization here in the UK. One point to make is that if you're custodying any form of crypto asset, under our new money laundering regulations that came into effect at the beginning of this year, you will be required to, first is Jan 2020, but the exemption period expired at the end of 2021, beginning of 2021, sorry, you will need to have a registration with the FCA to act as a custodian wallet provider. That process is akin to a kind of quasi authorization, and there is a degree of delay in getting all of those applications through, but that would only ever result in you being registered for money laundering purposes with the FCA and not authorized. So at the moment we've got a fairly clear distinction, and I guess just touching on that question, maybe just to bang the drum for UK PLC while I'm at it, I think the regime is changing. I think at the moment our regime in this space is fairly clear about where the lines are drawn, but at the moment that is a snapshot, and I think the position is going to get more complicated when we think of new regimes and we think of DeFi and the expansion of that. So I think that's about it from me, and I'll pass across to Glen in the US.
Thank you, Albert. So I'm not going to make a claim that the United States has the most coherent, cogent, whatever these adjectives were. Hopefully there is somebody out there that has a simpler, more straightforward regulatory scheme than we do. The provision of crypto asset related custody services on behalf of others will almost inevitably trigger registration and regulatory requirements under various US regulatory regimes. So for this purpose, custody services should be understood broadly to include not only holding assets for others, but facilitating settlement and transfer as well. So licensed banks and trust companies can provide custody services across a variety of asset classes, crypto asset classes, and have recently received some encouraging guidance in this regard at the federal level. Somewhat recently, the SEC provided on a pilot or trial basis for special purpose brokerage firms to provide custody services for cryptocurrencies and crypto assets that fall within the securities bucket. I'm not aware of any brokerage firms that have completed the relevant approval process for this purpose. Registration, licensing as a brokerage firm can be a very time-consuming process, and often up to 9 months or longer. So that process is just starting. The CFTC has issued guidance regarding custody by future commission merchants or FCMs of virtual currencies in customer accounts. So, and then even in the case of assets and transactions that don't fall within any of the regulatory schemes and can be traded freely. So that would be cryptocurrencies that are treated as cash that aren't being involved in transactions that look like futures or other regulated transactions. So unless the provider of the custody and settlement services falls into one of the earlier reference categories, so banks or brokerage firms or FCMs, persons providing custody and settlement services must comply with money service provider licensing requirements at both the state level, so every one of the states or US territories in which the provider is doing business, and with the Financial Crimes Enforcement Network, or FinCEN, which is a branch of the Treasury Department. This money service provider licensing requirement brings with it a requirement that you comply with anti-money laundering rules, which includes know your customer requirements and ongoing monitoring for a variety of suspicious activities. It should also, finally, should be also understood that custody rules in the US pertaining to crypto assets are still very much in the process of development. So with that overview, let me pass it on to Etelka in Hong Kong.
Thanks, Glenn. I will bang the drum for Hong Kong because the regulator here is trying to be practical and trying to shoehorn all these new types of assets into the existing regime and is providing guidance. So, you know, they are trying and they're being practical. So, for example, for asset managers who invest, you know, under 10% of their AUM in digital assets, you know, they've said we have no special requirements. So you know, there are practical approaches. In relation to Hong Kong, just to take a step back, the local securities regulator already has a regulatory framework in place for virtual asset trading platforms. Again, a practical solution. So this regime works on an opt-in basis and is available at the moment only to exchanges that offer trading in at least one securities token or one token that qualifies as a security under the local regime. And for those exchanges that seek licensing under this regime, the custody must be provided by an associated entity that holds a trust company service provider license that I explained previously. And that comes with a full range of AML related obligations, similar to what was described by Glen. There's a new proposal in place to close the regulatory gap and to seek to regulate providers of non-securities virtual asset services for the first time now. So for non-securities token custody, there's currently no specific licensing regime in place, but again, likely subject to change. And as I said, if the trust structure is used, they'll have to hold this TCSP license. There's some interesting rules around the exchanges that are subject to the SFC opt-in licensing. For example, the platform operator has to ensure that 98% of the virtual assets are held in cold wallets and limit the holdings of assets in hot wallets to no more than 2%, for example. So some interesting rules around the details with us. And with that, I'll pass over to Carolina again. Thank you.
Yeah, thank you, Etelka. As discussed before, a license is in fact required for the custody of crypto assets in Germany. Under the current situation, the custody of crypto assets that qualify as such under the Banking Act requires a license according to crypto custody business. And as a reminder, for the time being, tokens, mostly all tokens qualify as crypto assets under the Banking Act, including security tokens and crypto securities. Crypto custodians, maybe that's something you have to know, have to comply with nearly the similar requirements as other financial service providers. This means that generally the requirements of the German Banking Act apply. For providers that do only provide crypto custody business, there are certain facilitations regarding own funds-based liquidity, lending business, etc. So it's a little bit regulation light in this case. However, once the new Act on Electronic Securities has entered into force, the custody of any crypto assets covered by this Act will be normal custody business of securities and require a respective custody license. And as already said, this includes bearer bonds at the moment. It may be fund units in the future, but it's not entirely clear when it's extended to other kind of securities. So for all other type of financial instruments under MiFID, crypto custody will remain the relevant regulation and the relevant license, as electronic securities will then be fully fledged, but not derivatives, not shares, etc. Lastly, the custody of private keys requires a license for crypto custody, and this even in case where the private keys relate to electronic securities in future. This means if you just have the private keys in custody, you require a respective license. So that's me for the moment.
Thank you, Carolina.
Yeah, thank you, Anna.
So we've had a few more questions come in. All good questions, quite challenging ones. Isn't it unrealistic to expect fintechs to be able to understand the existing patchwork of laws? And why is there not more global coordination in this area? I mean, entirely good question. I think it's a fair point. It is complicated, even within one jurisdiction, let alone when you're trying to look at this on a global perspective. And actually, if we get a chance to come to this question a bit later on, we might discuss that in a bit more detail, trying to think of some kind of practical approaches to dealing with that. But in terms of that question, kind of why there isn't more global coordination, I guess the way that this has started out is really the regulators trying to essentially catch up with market developments and developments in technology. And many regulators have been trying to think about how to fit this within their existing regimes as opposed to necessarily creating brand new regimes. Obviously, we're starting to see that change, and I think the MiCA development in Europe is a good example of that, which is aiming at both harmonisation across a number of jurisdictions, but also a series of a regime that is designed specifically for these types of asset classes. But obviously that's just one region, and there's many more to deal with. So as I say, we may come back to that question a little bit later on. In the meantime, if we perhaps move to our next question, which was really about financial crime, and actually this is an area where there is certainly a kind of intended international approach here, led by the Financial Action Task Force. So the question is, we know that financial crime opportunities and risks are created by crypto assets, and this is a concern that's shared by regulators around the world, and many of them have put in place regimes that are designed to try and mitigate these risks. So is crypto custody subject to anti-money laundering requirements in your country, and if so, how do they work? We're just going to ask a few jurisdictions to talk about this. Floortje, perhaps we can start with you in the Netherlands.
Yeah, thank you. So in relation to AML rules, indeed, we do have some rules that now apply in the Netherlands. And I think it's sort of similar rules that Albert already alluded to, which are based on the European Anti-Money Laundering Directive number 5, which indeed sort of regulates crypto wallet providers and exchanges. And under Dutch law, they need to register indeed with the Dutch Central Bank. Therefore, so in principle, the custody of the assets itself is not regulated. But although you are not regulated, you do need to get registered with the Dutch Central Bank, and the process is quite tedious, to be honest, what we have heard. And there's already been a case against the Dutch Central Bank that they have imposed unrealistic rules in relation to transaction monitoring and sanctions. So in that respect, we do have the rules. And like I said, they are based on the European directive, which prescribes that. So those rules apply or should be implemented throughout the whole Europe. Just like Hannah said, we in Europe there is at least the intention to harmonize as much as possible. And like I said, also with the first question, the Dutch legislator tries to not transpose or gold plate or implement more rules or different rules than that we currently have on a European level, just in order to indeed at least on a legislative level, create that level playing field, so that you don't sort of have a choice between, or of course you always have a choice, but you don't sort of can cherry pick which jurisdiction you want to go to. Although sometimes in practice, even though the rules will be the same, the Dutch central bank could, well, like I said, in practice, maybe impose different rules that you have to comply with. Like I said, based on European law, so harmonized as much as possible in all the other EU member states, and also then in the UK. But maybe Etelka can tell you a bit more on the Hong Kong.
Sure, thanks, Floortje. So we've got some developments in this space. So there's a proposal currently underway to amend the local anti-money laundering legislation to bring exchanges that offer non-securities digital assets within the regulatory remit of the securities regulator, in line with the recommendations that FATF made in 2019 in relation to virtual asset service providers. And this is where, just coming back to some of the comments made in the chat, where, you know, again, regulators is trying to be pragmatic. So the proposal as it stands at the moment seems to only cover virtual asset exchanges and not all types of virtual asset service providers. So if you followed the FATF guidance, that definition is much wider and would catch all manner of safekeeping and custody activities, whereas the proposal at the moment here in Hong Kong is much narrower. And that's because the regulator looked at what's going on here, and the majority of the activity in relation to the digital asset space in Hong Kong is exchange related. So they're focusing on where is the biggest need to start regulating. And so with that, I'm going to hand over to Tim now in Canada.
Thanks very much, Etelka. Yes, as I mentioned previously, for Canada, custodians of funds for regulated platforms and or for funds in regulated platforms are generally required to be certain types of federal or provincial financial institutions. So those financial institutions themselves are subject to AML requirements, which include registration with Canada's AML regulator, FinTech. Also, a custodian that exchanges crypto assets into cash or crypto assets into other crypto assets, as well as custodians that transfer crypto assets between parties, would be subject to similar AML requirements as money services businesses. So with that, I'll hand it back to Hannah.
Thank you, Tim. Right, so now we wanted to change tack slightly with our next question and focus on collateral, because we see increasingly crypto assets of various types being used as collateral, and often that goes alongside custody. So as we mentioned earlier, custody in the crypto asset space is something that kind of crops up in a number of different guises and contexts, sometimes where you wouldn't necessarily expect to see them in a traditional securities type world. So the question here is, what are the key issues on using crypto assets as collateral in each of these countries? And do we have any examples of how that's working in practice? So we'll start off with the UK and Albert.
Thanks, Hannah. So I think from the UK standpoint, we've got an increasing body of judicial thought and thinking around the fact that crypto assets are property. And so if they are property, then they should, comparing it to other forms of property, be able to be subjected to, security interests and pledges, be able to be lodged as collateral, to be held. And so I think we're fairly along the curve in terms of thinking about how, whether that threshold question is satisfied, i.e. can crypto assets be utilized as collateral? So I think we're there in the UK. In terms of practical issues that we've seen working with people, I think you find issues relating to valuation. How do you find reliable valuation sources? There is a growing market for benchmarks in crypto assets, but that is still fairly nascent. How do you deal with fluctuation in values, how does that impact into things like collateral floors and over collateralization, and how quickly can you burn through collateral, if you have a rapidly changing market value of the collateral that's held. There's also possible issues on liquidity. So if you are facing a particularly strained liquidity position, which is, I think, more likely to occur in the crypto assets markets than it is in more traditional, more liquid markets, for other forms of financial instruments that are typically lodged as collateral, you end up in a situation where you might find that the collateral is not necessarily worth as much as you had thought, because you can't liquidate it to support the debt position that you've taken on. So I think they're the core issues in the UK market, and I'll hand across to our US colleagues on that.
All right, thank you, Albert. So in the US, a lot of the rules around collateral come from the Uniform Commercial Code. And those are not necessarily well suited to digital assets. And so what ends up happening is you have to look at how you can possess and control the digital asset, and also prevent somebody else from possessing or controlling it, because anyone who has access to the private key has access to the tokens that are in that wallet. So it's not as simple as just giving somebody the login, you can't analogize to handing somebody the keys to your safe deposit box. So you need real technical solutions around that. But otherwise, as a concept, I think the US law doesn't really have an issue with using crypto assets as collateral. I'd also want to point out, in the lending context, we are aware that the CFTC has looked at some loans of crypto assets as a swap when one crypto asset is lent out and another crypto asset is pledged in as collateral. They find a lot of similarities there to swaps land. So that's something to be careful about, which is just an added layer of complication. And so now I'll hand it to Caroline in Germany.
Sorry, I had to unmute myself. Yeah, in Germany, in particular, the unclear classification of crypto assets under German law hampers their use as collateral. This particularly because for securities, German civil law requires a physical form, and only physical securities provide all advantages you need for collateral, or you expect from collateral, like protection in case of insolvency, and so on. So while the new Act on electronic securities maybe solved this problem for certain type of securities, even in those cases, the treatment of the private keys is not clear at all in an insolvency situation, even though everybody says it's clear it has to go with the securities because it's a key to use them. If you've got them under an insolvency situation, it's not clear how it's really treated. From a legal situation, the key themselves do not qualify as securities and are still crypto assets, as I explained before. So what can be said is that at least for most of DLT structures, an asset held on DLT is useless without the key. And so this is, I think, one of the most important issues to solve when it comes to the use as collateral. But we can say there's nevertheless in Germany, there is a big appetite to make electronic tokens and securities available for collateral. And so there has been a concept tested by Deutsche Börse together with HQLex. You might have heard about it. It is a partnership, and they created a model which allows the exchange of baskets of securities by the way of tokenizing them and using them as collateral. This is an interesting project, and a lot of market participants, big market participants take place. And so I think in near future, because you were asking also about a good market, I think in Germany and in whole Europe, the tri-party collateral agents will use DLT structures to move collateral, and this will replace the existing model in near future, whether we have a new law or not. Thank you. Thank you. So Hannah, back to you.
Thank you, Carolina. We have actually just one more question that we wanted to discuss ourselves. So while we're doing that, if anybody would like to ask some further questions through the chat, then please do. We might have a little bit of time to pick them up at the end. So the final question we had was this one. What do you think is the biggest issue when trying to provide a crypto custody service cross-border to clients in multiple jurisdictions? And I think this really does kind of pick up from the question that we received earlier. But the reason that we kind of thought about this question is because crypto custody solutions, just like the assets themselves, can easily span many jurisdictions from a technology and a client perspective, but the law is designed along jurisdictional boundaries. And so we think this is, as has been identified, quite an important question. And if my colleagues can think about not only the issues, but any ideas as to how people might try and address those issues, I'm sure that would be even more appreciated. So Albert, should we start with the UK?
Thanks, Hannah. So I think from a UK standpoint, I mean, and more globally, I think the issue, and one of the commentators has hit this on the head with the question, is there's such a divergence in the regulatory regimes that apply to crypto assets. It's very difficult to scale a product globally if you don't, not necessarily even on the regulatory standpoint, but you don't yet even have a clear position about legally what that product is or what that asset class is in different jurisdictions. And that creates uncertainty around, how it can be held, how it can be transferred, what insolvency law protections there may be, what the overall position is of the persons interacting with that asset class. So I think from my standpoint, really navigating those completely divergent regimes, where in some jurisdictions there's no regime, in other jurisdictions it's just treated as if it is a financial instrument, for example, you have that real divergence. And that means you do have a slightly more fragmented approach to expansion. I think in terms of positivity, I think where you will get, hopefully where we can get to is, in the same way we've had sort of, an IOSCO style approach to more traditional financial markets, hopefully something akin to that in the context of crypto assets and crypto custody and other services connected to crypto assets, where we can have a slightly more harmonized global approach, perhaps some standards or minimum standards that can be used to filter down. I don't think we're ever going to solve the problem that ultimately legislation and regulation is a sovereign law issue. Even in the EU, where we have harmonization, we still have divergence at national level. But I think some harmonization is clearly better than none. And if you think about, I don't want to take too much thunder away from my EU colleagues to follow, but that initiative of MiCA and other things we're thinking about at that pan-European level is clearly a step in the right direction. Whether you agree with regulation in the space or not, I think everyone would clearly agree they'd rather have a level playing field for everybody, if there's going to be some, than this current approach where we have lots of fragmentation. So I think from my standpoint, that's a core issue. So I'll hand across to Glen and Andrew in the US.
Thank you, Albert. So in the US, I think a lot of the things that Albert just had to say would also be applicable. So just kind of taking a broad view, US jurisdiction is triggered by transacting business either from the US or with persons physically present in the US. And it may, in some cases, make a difference whether the transaction is solicited or not. But broadly speaking, I would think if you're, keep in mind, if you're dealing with US present persons present in the US, then you need to think about US jurisdiction. In terms of how can you do these transactions globally when you have all these different regulatory regimes, the way I think about it is like a securities transaction. So people do global securities offerings today. The laws in Europe and in the US are very different, but people are able to do these transactions. And I think going forward, that might be part of the approach, that there will be specialized requirements or aspects of dealing with US persons versus dealing with persons in Europe or other jurisdictions. So Andrew, I don't know if you have anything you want to add before we move on to Canada.
Well, yeah, I think that it's important to think about the practical aspects of whatever custody solution you're using, because that's really going to be the core. And in many ways, once you actually have possession and control over the asset, that will start to trickle down into satisfying many of the regulatory requirements. And there may be, nuances, but the spirit of all of these requirements is to make sure that you don't lose somebody else's asset, that somebody else doesn't steal that person's asset from you, and that your customer has effective access to that asset when they want it. So if you have a technology system that does all three of those things, you actually will have gone a long way, maybe without consciously knowing it, to having fulfilled the legal requirements. So I'll leave you with that and pass it on now to Tim.
Thanks very much, Andrew. So I think, in any one country, there's often multiple overlapping regulatory schemes to take into account. It's certainly true of Canada. So it becomes exponentially more complicated, as I think everybody's acknowledged, when you take, when you include a foreign jurisdiction. In Canada, for non-Canadian custodians that are looking to enter the Canadian market, there is a regulatory framework to operate within. The securities regulatory framework has been defined for crypto assets. And I think that's generally helpful. I just also add specifically with respect to Canada, for foreign custodians that are looking to enter the Canadian market to act for regulated securities participants, there are minimum capital requirements. They would not be an issue for traditional established financial institutions, but they could be a barrier to entry for smaller technology firms looking to do custody in Canada. And with that, I'll pass it to Hong Kong, I believe.
Thanks, Tim. I'm actually feeling quite optimistic about all the efforts that are made both at the regulator level. I should say that because I used to be one, but there is an enormous amount of work going on with IOSCO or other super regulator level, but also around industry. So we're quite involved in across all the regions that you're seeing and speaking to in various industry groups to really work out some practical approaches or solutions, or even to put the proposals to the regulators to how it might all work. And if you look at, FATF is obviously leading in the AML space with coming out with the expected standards. And, we were in Osaka in 2019 after the G20 to talk with the virtual asset service providers, and the FATF came and joined the meetings to really understand what the industry needs. So I'm quite hopeful that we're making good progress. So with that, on the positive note, I'm passing over to Carolina. Thank you.
Yes, Etelka, I'm positive too, which is a good sign. Nevertheless, beside the things we've already said, like we have to harmonize definitions and regulations, this is all clear, and I hope there will be a big step made by implementing MiCA on the one side. But there's another discussion I think we have to have in at least Germany or in Europe. It's the level of protection and how you see crypto assets. I mean, in Germany, I have the feeling you have the one part is the big banks. They want to use electronic securities, want to use it as collateral, and there is the appetite of the regulators to have the maximum protection, like you have it for securities and everything else, which is perfectly understood. And then you have the FinTech community, lots of other types of tokens, which are, not securities and different types of assets. So, and there is another appetite for how to do it and whether it fits with the actual framework, the IT framework, and how things are done. And so I think there is still a gap between all that, but it moves together, I think, at the moment, comes together, and it will be interesting to see how regulation and everything will be at the end, at least for Europe and Germany.
Yeah, and maybe just to add to Carolina and to the rest, I think indeed there are quite a number of initiatives now to really, harmonize as much as possible, at least also indeed in the EU. I think one aspect that is still would need to be considered in more detail is the insolvency part, of course, especially with collateral and custody. Insolvency is an important topic, and I think that is even less harmonized nowadays than the regulatory aspects of cryptocurrencies and assets. So I think that is something that we would need to hopefully look into in more detail and get that more harmonized as well. But I think that will be picked up as well. Thanks, Hannah.
Well, thank you, everyone. Yes, I think there's a lot of positives there, as well as still challenges to face, but many positives. And we are in fact seeing a number of custodians starting to roll their solutions that might have been developed in one country out into others around the world. So it definitely is happening. I asked for some questions. It's been really great to receive some questions, but also a few of you have said thank you, and thank you to all the participants for their insights so far. So I'm glad that you've enjoyed what we've said thus far. Just to try and kind of pick up on a couple of the other questions that have come in, all of which are really interesting ones. There is one about NFTs and in particular digitized art and the potential custody of that. Andrew, I know that you've been doing a lot of work in this area recently. I wondered whether you might want to pick up on that.
Sure, thank you. So as a threshold question, you have to look at the particular NFT and what it actually is and what it represents. So is it an NFT that is tied to some real physical art in the real world, or is the entirety of the art captured in the NFT? And then what rights does that NFT represent relative to whoever created or originated the artwork? And so, you could have, in the same way that you could take possession and have custody over any token, you could do the same for the NFT. But what does that mean? And it may be that simply you have the NFT, which could just be the equivalent of a paper certificate of title and nothing more. Or so much could be rolled into the NFT that it's like taking a sculpture or a painting and putting it in a vault, and that's what the custodian is holding. So, NFTs, there's still a great range of the bundle of rights and the information that's captured within the NFT and what it means. And so you have to start there and then apply a lot of what we've talked about to what you end up saying is the property corpus of that NFT.
Thank you, Andrew. So yeah, it almost kind of goes back to that first question we asked, I think, doesn't it, in terms of what are the different, I guess, categorizations of tokens in each jurisdiction and how do they fit into the custody regimes. One of the other questions we've had is in relation to insurance and crypto custody. In particular, is there enough cover to mitigate some of the risks, for example, hacking, bad actors, loss, etc. And I guess some of those types of risks are very particular to crypto custody as opposed to traditional custody. I wondered whether, Albert, you might want to mention some of the work that our colleagues in our insurance team have been doing in relation to crypto custody, just very briefly.
Yeah, sure thing. So I think what the insurance industry has been trying to do is itself upskill on what the risks are associated with crypto custody solutions and how they differ based on whether you're adopting a kind of omnibus wallet structure or whether you have segregated wallets, or whether it's a bailment or whether the custodian is only really holding the keys from their perspective. So I think they've been looking to try to figure out the risks. I mean, our colleagues have been working with various insurers. They've also been working with Lloyd's of London on what are effectively kind of market standard guidance on how to approach crypto assets risks. There are other risks such as the cyber risk, which is more prevalent, possible risks of forks, and we're seeing more and more just exclusions of liability from custodians for those types of actions. And so I think just accepting that it's unlikely they may get coverage for that, and so just excluding liability altogether. I think there's clearly work to be done, and we've understood from some clients that perhaps getting things like professional indemnity insurance can be quite strained and quite tight in the market and quite hard to price. And so I think there is still some way to go in the insurance markets for these asset classes and for this type of activity. But certainly based on the work we've been doing and the work our colleagues have been doing, there clearly is a progression as insurers try to get to grips with what the risks are and how to price those risks in a sensible and pragmatic fashion.
Thanks, Albert. And then I think the other question that we haven't really picked up here, we have actually already touched on. So this was the question about clients being international. So do the jurisdiction requirements depend on the location of the custodian? I think Glen touched on this actually, but I think it's probably worth thinking about both the jurisdiction of the custodian, but also the jurisdiction where the clients are based. That's certainly what Glen said in relation to the US, and it's what we would say in relation to the UK. And I think that's probably a good way of thinking about it from most jurisdictions' perspectives. So it's probably time to wrap up now that we've kind of attempted to deal with all of those questions. We just wanted to finish off by letting you know about some of the resources that we have available for anybody who would like to know more about this topic, or may want to kind of let us help them keep up to speed with changes as they proceed, because there are many changes really across the world. So we have a couple of blogs, both one in relation to financial services called Regulation Tomorrow, and also our FinTech Pulse blog, which is more specifically focused on FinTech. We also have a FinTech hub on the Norton Rose Fulbright website, which is home to a number of materials that we have published on different topics, some of which we've touched on today. So everyone is welcome to take a look at those and to listen to the podcasts, and also to get in touch with us if you have further questions, or you'd just like to have a further chat. So thank you very much for having us talk today. We've really enjoyed it, and we hope that you have too.